and Rahul Arora is joining in. He's CEO, Nirmal Bang, Institutional Equities. Rahul, very good morning to you. And interesting way to spend a Saturday, especially today. Would you say that the fact that the market has shown some amount of confidence, faith, and optimism in what we'll hear in the next couple of hours is a good sign to start off with?
Morning, Tamanna. Thank you for having me on the show. I think it was quite a salute going into the budget, right, yesterday. And I think, corporate earnings probably had a lot to do with it. But I think no negative news will be positive news. The market has seen a reasonable correction. I think stocks have fallen 2x or 3x of what the actual market percentage fall is. So I think, I don't think there's too much room for tinkering. I think, most of the numbers are consensus. From a market borrowing perspective, 14 and 11 lakh crores are a gross and net, 4.5% fiscal deficit. We're expecting about a 10% growth in Capex. Not too much more than that, I think. Even on the taxation front, it is pretty much personal income taxes that are driving tax growth. So I don't think there's too much of a tinkering that can be done there, because the growth that you're seeing of 10-12% in direct taxes is not coming that much from corporate taxes or anything else so much as it is from individual income taxes. So hopefully maybe at the bottom of the pyramid, Tamanna, which is something that has been probably spoken about ad nauseum, because if you even look at the consumer companies' results, even this quarter they're struggling. There's no question. And the only reason you keep talking about tax breaks or doing something at the bottom of the pyramid is to revive consumption. So I think they'll keep doing what they are on the manufacturing side of the economy. The good part is that the defense companies so far have delivered on earnings. The EMS companies as well have delivered. There's been a lot of focus on PLI there. And valuations in both these sectors have become reasonable. So I think from a sectoral perspective, I'd be looking at consumer EMS and defense from this budget. But I think on the broad arithmetic, a 10-12% tax growth, 4.5% fiscal deficit, and probably yields inching closer to 6.5% as we go along. That should probably be the summation of the budget. Hopefully nothing negative. We'll digest this and move back to corporate earnings on Monday.
Rahul, good morning. And you may or may not be able to see, but the studio out here is raising a toast to your birthday today. So many, many happy returns of the day. Have a great one. And may the FM give you a birthday gift as well.
Thank you so much, Neeraj Bhai. I think my biggest gift over the last many years has been having friends and brothers like you who have, that we wish for each other's good health, success, and prosperity. And that means more to me than anything else. So thank you so much for remembering and acknowledging it on national TV, Neeraj. Really appreciate it.
Yeah, Rahul, we're waiting for the birthday cake in office. Now that we have, you have not come to office.
Tamanna, I would have personally bought it, but the BKC traffic is so miserable these days that getting in and out would be half the birthday spent. But I will have one sent across soon enough. I promise you that.
We'll have the virtual cake on your behalf.
Yeah, but before I ask my question, Kush, you want to ask something too?
Rahul, first up, a very happy birthday. See, a lot of us market participants have these superstitions, right? So do you have one where मेरे birthday पे market ऊपर जाता है और मेरे birthday पे market नीचे जाता है? Do you have one of those? I'm keen to listen if you've got one or empirical evidence.
This is the question of the morning.
No superstitions as such, but the only thing that I have done for many years, I can tell you, is I don't leave my house without touching my mother's feet, and I don't leave my house without seeing Saurav Ganguly and Novak Djokovic's photographs. These are three people that really inspire me, and no more superstitions beyond that. I just hope we have a good day at the bourses, and
So
we
Rahul,
can have a good Saturday evening for all of us.
Yeah, most certainly. Rahul, very quickly. So if there is no tinkering with taxes, long-term, short-term capital gains, and if the Capex estimates turn out to be okay, would that be a budget well done?
Absolutely, no question. And I think like I said, if there's no negative surprise, I think, even the pharma earnings that have started coming in are looking all right. I don't see any reason why the market can't rally today and going into Monday as well. Because I think, Neeraj, let's put it into perspective. I think the economic survey has been too optimistic in terms of projecting growth. 6.3 to 6.8% is too optimistic on current evidence. But let's say that number is closer to, say, 6.2%. We're still the fastest growing economy in the world. Yes, China valuations had become cheaper relative to India valuations a while back. And yes, of course, some monies have gone into the US after Trump has been elected. But I think these are more short-term phenomena. I don't think an Indian market that's heading towards a 4% fiscal deficit in a year or two from now, maybe by FY 27-28 towards the FRBM target, and a 6% growth. And Neeraj, I think this budget will probably set the tone. And we've got some hints from the recent Reserve Bank of India's operations that we potentially may be looking at a beginning of a small rate cut cycle, but that may also augur well. So I think all things considered, the start of the result season wasn't that good, but like you rightly said, if there's nothing negative, combined with what our growth projections and earnings are, I don't see any reason why the market could not have found a short-term bottom.
Rahul, what were you thinking when you heard about all the tariff noise this morning? And perhaps you won't see an impact today. Today is all about the budget, but 25% on Mexico and Canada, 10% additional on China, and then a promise of round 2 on the 18th of Feb, and a lot more actually.
So I think there are two parts to this, Tamanna. One of this is not entirely unknown. I think if you've heard his speeches and even the presidential debates that he has had in the run-up to the U.S. elections, he has spoken about this ad nauseum, and I think there have been enough and more articles written about it in the New York Times and Washington Post over the last many months. So I don't think this has come as a surprise. If anything, India could be a beneficiary on the items these tariffs are levied on, because if there is an alternate country that they look to source these or procure these materials from, and India is a producer of that, we could stand to benefit. I think we have made a great start on the External Affairs Ministry with speaking to the counterparts in the US by allowing ourselves to take back illegal immigrants there. I think that will go a long way in terms of easing tariff concerns on a market like India. Add to that, our currency has been relatively stable. Our external sector has been very stable from the current account deficit standpoint. So I think the macros, and the most important point, Tamanna, I think if you look at the deficit that China has with the United States, I think it is close to $350 billion. India is just about $45 billion, give or take. So we are a fraction of what China is. So I don't think we'll go anywhere close to that. So anything that affects global trade that India produces is only going to stand us in good stead. So it is very similar to the China plus one theory that was spoken about at the beginning of the lockdown in COVID. We did benefit through sectors like EMS and chemicals, and I don't see any reason why that cannot persist going forward. And last point on that, from a foreign flows perspective, if you're looking at countries or global large investors that are looking to allocate capital, you would not go to countries where tariffs are being applied, because you would view it as a destabilizing equation between the US and that country. And if the US and India are able to find that equilibrium, we'll be incremental beneficiaries of foreign flows to that effect as well.
Rahul, Harsh also joining in. Curious to know, last 3 to 4 budgets, the focus has been on government Capex. But the handover to private Capex was always expected to happen, but hasn't really happened. That's where I believe somewhere we've fallen short. What's going to be that, change in this budget that you're expecting to actually drive private Capex?
So you've touched on a very important point, and it's a very good observation. I think if you look at the CMI announcements for the financial year, if you look at center, private sector, and state, they're all down 20 to 30% in terms of announcements. I think a bulk of the announcements that had happened in the previous fiscal year, and I'm talking pre-Hindenburg, were predominantly by one group that was looking at, which is the Adani Group, which was making a lot of announcements into alternate energy, ports, so on and so forth. So Capex was pretty much being driven and announcements by one or two large business groups in the country. That took a little bit of a backseat, but I don't see any reason why that cannot revive in a very substantial way. I think the point about Capex growth that you make, that's going to be, and the reason I say 10% is because the center, in their calculations, they also factor in the amount that they're giving to states for their capex in their capital expenditure number. And if you see, a lot of states have actually used that amount of money for what we would call populist measures. So and because we've had a lot of state elections, let's be fair. So I'm not sure how much the government of India would be, incrementally keen to devolve to the states from what they consider capital expenditure. But you're absolutely right, because I think, to the point that we were discussing with Tamanna a little earlier, when you have a period where global trade is going to be in a state of influx, the X and M component of GDP is not going to be in your control. So you're left with, consumption, investment, which is government and private sector. And then, of course, you have government spending. Private capex is not happening in a material way, neither is consumption. So the onus of GDP growth is going to lie on government reviving capex. The other important part is NHAI awardings haven't been that great over the last 2 years. And if you look at most road contractors, they haven't been reporting the best of results as well. So I would not be surprised if the government decides to make some more announcements to that effect, and they center it more around increasing PLI schemes and look at giving a boost to sectors like EMS as well as defense in this sector, and so also for roads. I think Mr. Gadkari was doing a remarkable job. It's gone off the boil the last couple of years, but there's no reason to suggest why it can't come back in a material way.